gang? Michael Edward here, head trader at True Trading Group. It is August 7th. I've got a really important lesson that I'm going to talk to you about that has to deal with risk management. Okay, risk management is what this is going to all be about. This is an important lesson, so I want you guys to listen up, pay attention. Before I get started, guys, I want to let you know that you guys can follow me on Twitter at MikeEdward_TTG. Go give me a follow. I always post some stuff up there about what I'm trading and what I'm expecting during the day. And now let's just get into the day. We came in here today, guys, and the SPY had a gap down. We gapped down here mostly because we got the 10-year Treasury yield started to tank and fall off a cliff. Lowest levels we've had in years. And we also got, on top of that, to kind of add salt on the wound, we got horrendous manufacturing data out of Germany, which actually has negative rates on their bonds and everything in Germany. So negative rates actually there, and Europe is, not really doing too hot as the global slowdown really starts to continue to take shape. And you got, a little bit more of the probability and the chances of recession are starting to work their way higher. Now, we came in here today, and I thought to myself today that last week, the market was down mostly because of the Fed. This week, the market was down mostly because of China. And then now today, we were down kind of because of both. And I'm thinking to myself that with the gap down here today, if the 10-year Treasury yield is starting to really sell off and we break below 1.6, okay, I thought that we would see some panic come into the market. I thought the SPY would break below Monday's low, and I thought we had another 800-point down day in the making. I thought we were going to get down and test that 200-day moving average today. That is what I thought, and I went after that trade aggressively in the morning. Let me kind of pan this out. Okay, so here's the daily chart. Okay, we were opening let me see if I can drag. Okay, we were opening right around here. Okay, and I thought if we couldn't get back above yesterday's lows, that we would get down. First take profit would be Monday's low. We'd break below that and then continue lower and get down and test that 200-day moving average. That is what I thought was going to happen. That is what I was planning for. That was the game plan here on the day. And you guys can see right off the bell, you guys can see here's yesterday's low, that little support area. And then as I zoom this in, you guys can see this was an area of resistance for the SPY right off the bell. So right off the bell on that gap down, right in here, guys, I jumped in some SPY put options. I got the 284 strike today, expiration at $1.79 a contract. We'll take it to my trade announcements. Zoom it in. There you guys can see I bought the 284 strike today, expiration at $1.79. Stop if the SPY gets above that high of the day area, 284.75 area. I would have stopped out of the trade. So right here, we roll this over, guys. I was very confident on this trade. This is where we get into the risk management lesson. I was very confident on this trade. I talked about it all morning pre-market. I was like, this is my focus. I think we're going to get a rollover. I think we're going to get down. We're going to test Monday's low, and then I think we're going to break Monday's low. I was half right. We got down and tested Monday's low, but we did not break Monday's low. We actually stopped on a dime. Okay, stopped on a dime. There you guys can see the support from Monday, and here you guys can see we got down there. We printed the low and did a complete 180 about face and just ripped higher up to new highs. I was very surprised to see the market actually go green here today. And we ended up going green because the 10-year Treasury yield actually started to recover and started to increase. We actually got below 1.6% very briefly, momentarily got below 1.6% on the 10-year. And as soon as that happened, it got back above 1.6 and just started to recover 161, 162, 163, all the way back up to we got 1.67 on the 10-year Treasury auctions today. And the low on the 10-year coincides with the low on the SPY. And I don't think it's a coincidence that the SPY traded lower off the bell. So did the 10-year. Once the 10-year put in its low and recovered, the SPY put in its low and recovered. And I wasn't expecting that. I wasn't expecting the 10-year to recover. I wasn't expecting the SPY to recover. I went for it. I was very confident in this trade. Okay, I was very confident in this trade. Once we broke below 283.50, I thought that's it. It was going to be a home run trade. I thought this was going to be like one of my banner days. Is really what I thought was going to happen here. I thought this is going to end up being like one of my bigger days on the year, and it just turns out that I was wrong. But the lesson to take away from the day is no matter how confident you are in a trade, I don't care if you are 99.99% positive, you will never be 100% sure. I don't care how confident you are, do not let greed cause you to break away from your rules, away from your strategies, get away from your game plan, and do things that are uncharacteristic to your trading style. We have these rules in place for a reason. Do not let greed cause you to change those rules, because my first target on this trade was in front of Monday's low. That was the first take profit target on the trade. So once we broke below the initial morning low right there, we accelerated to the downside, and right when we got down towards Monday's low, right in front of it, I took some profit off the table right there. Okay, I'll take you guys back to my trade announcement so you guys can see I took some profit off on those put options at $2.60 a contract. That's about a 45% gain on that first take profit. Okay, now again, at this point during this trade, I was doing a happy dance. I had a big position. I thought we were going to break below Monday's low. I thought we were going to roll over. I'm looking for a move down towards 277, 278. We're going to pierce that 200-day. I've got the 284 strikes. If we get down there, I mean, these things are going to be trading at $5, $6 a contract. It's going to be a monster trade. Okay, they probably would have even been trading higher than that. Okay, it would have been a monster trade. I was so confident, and it turns out that I was wrong. But the point is that I was so confident in the trade but I did not let the greed overtake me and cause me to just hold on to my entire position, because I was so certain we were going to break below Monday's low in the first, when we got this action, when we got this sell-off, I was so confident we were going to break Monday's low, but I still took profits at that point. I did not hold on to the position, and it saved my ass. Saved my ass that I did not hold on to my entire position and just take no profits, because we did a complete about face. We recovered, ended up breaking through a new high, and I had to stop out of the rest of the position on that new high. Here you guys can see I sold out the remaining piece at $1. If I do not take this piece of profit off at 260, if I do not stick to my rules and my game plan and take profits off on 25% of my position on that first target, I'm getting crushed on this trade. This take profit saved me. And that is why this video and this lesson is so important when we discuss risk management. Okay? Do not ever let greed cause you to change your style and deviate away from your game plan and break your rules and do things that are uncharacteristic of your trading style. Okay? Again, I don't care how confident you are, because, guys, I was so confident. I mean, I would have bet the house on this. Okay? I would have bet the house on this. And I was wrong. So even though I felt so confident, I was wrong. And had I not taken profits, I could have very easily said, oh my God, that this is it. This is going to be a huge day. I'm not taking any profits. I'm going to let this thing ride. I could have said that. That would have been greed taking over and affecting my decision making. And I would have got my ass handed to me as I exit those options at $1 when I got long at $1.79. So taking that profit off at 260 helped me big time. Okay, big time. And it didn't just help me once, it helped me twice, because I went after this damn trade again after I started to see an ascending wedge pattern form on the SPY. Okay, here's your ascending wedge, and I thought to myself, okay, you know what? Now, okay, fine. We didn't roll over and break below Monday's low right away. I'm not really too surprised, because I did expect some support to be at Monday's low. Yes, this was a bigger bounce back than I was expecting. Nonetheless, we still have a bearish setup here in an ascending wedge pattern. We very briefly pierced that resistance level, fell right back inside the wedge. Right here, I bought again SPY put options. This time I bought the 285 strike instead of the 284s. I bought the 285 put option at $1.07. Okay, the ascending wedge pattern, guys, is typically will trigger once you get a break below, okay, this support level, this uptrend support level. That's the trigger, and I was looking for a move back down to test VWAP, which also lines up with this little previous pivot low. Okay, so right there I entered that trade. We got a quick pull in. I took some profits off the table when we did not break that support level right there. You can see here, took some profit off. Here we go. Took some profit off at $1.19, so long from 107. Took some profit off at $1.19. And thank God I did so, because we ended up breaking through the high of the day, and I had to stop out of the rest of that position again at 90 cents. But again, I took profits off on 25% of my position, and it is saving my ass today. Okay? Saving my ass today by getting those take profits off when I did. That is what this day is all about. I was wrong. And I'm still implementing these little things in my trading that will help control my downside. It helps manage my risk on these positions. I need to manage risk. I trade with large size. If I do not stick to my rules and I let greed take over, I can really get hurt with the position size that I'm trading. Now, granted, it's all it's all relative. Position size, whatever. It's all relative whether you're trading with $1,000 or $1 million. It's all relative. But the point is, guys, that you have to be prudent and you've got to be smart when you're trading. Doesn't matter how confident you are. You can't, do something that you would not normally do in a regular trade just because you feel extra confident, because no matter how confident you feel, like I said, you're never going to be 100% sure, and you can always be wrong. And even if you're 99% sure, that 1% is the time that's what you need to worry about. Because let's say this trade worked out. Okay, let's say this trade worked out. We didn't bounce back. We sat here. We kind of put in like a little bit of a bear flag. We did one of these. We did one of these. Then all of a sudden, we just got bang, and we just rolled over. Even if, taking that first piece of profit off right here, and then if we got that break, this still would have been a home run monster trade. Okay, so whether I'm holding my entire position and the trade works out, or I take 25% of my position and profit off the table and then I let the rest ride, either way, it's going to be a home run trade. I'm going to make money, so it doesn't really matter. It's regardless of the fact, it would have been a home run trade. But on the flip side, if I hold on to my entire position, don't take any profits, and take that loss, it's a huge hit, instead of me taking some profits off the table and then reducing my risk on the rest of the trade. And when I stop out, I'm taking a loss, but nowhere near as bad as what that loss could have been. So instead of losing on 100% of your position, you're losing on 75% of your position or 50% of your position. And that stuff adds up. You have to always be more concerned with that. Like I said, if you're 99% positive, you've always got to be more concerned about the 1% when you are wrong. Okay? Because when you're right, you're going to make money regardless, so it doesn't matter. But when you are wrong, you need to be more concerned with what's going to happen to your P&L when you're wrong. How bad are you going to get hurt? How much money are you going to lose? That's what you need to control, and you need to focus on more so than even how much money I'm going to make if I'm right. Because if you're right, you're going to make money. That's your job as a trader. Great. Job well done. Pat yourself on the back. Good day. Green day. Money in your pocket. Okay, you've got to protect yourself on the downside, and I don't care how confident you think you are in a trade, you've still got to be prudent. You still have to take profits when you say you're going to. You got to follow your game plan, and you have to control your risk. That is what this lesson is all about. That is what I want you guys to take away from the day, because it is important, and this stuff is, it could have been so easy for me to have said after this flush. It could have been so easy for me to just say, I'm letting this thing ride. I'm right. We're going to break Monday's low. We're going to roll over. We're going to that 200 day, and this is going to be a 50K, 60K day. I could have very easily said that, but I didn't. I stuck to my rules. I stuck to, my risk management. I took 25% of my position off the table in front of Monday's low, and thank God I did. Do not let greed overcome you when you are trading. Always be prudent and focus on risk management. Okay? Guys, like, comment below, subscribe, flick that little notification button with your mouse. I love to hear from you guys. I answer everybody's comments. I'll see you guys in chat tomorrow. Take care.